That's Affirm. Go ahead and try it.
Hello. On the 13th of January, Affirm IPO'd and became a publicly traded company. Its stock opened at $49 per share and saw a 98% pop to the upside to end that day with a market cap valuation of $23.6 billion. Affirm hit its all-time high of $146 in February before pulling back all the way to $48, just below its initial IPO price.
Are you serious right now?
Affirm CEO is PayPal mafia man Max Levchin. But what is Affirm? Is the company stock a buy right now? And where is Affirm and its stock likely to go in the future? Stay tuned for this and more. Keep it simple. I am not a financial advisor. I am just a simple trader looking for WPG situations. Yes, explosive exponential potential growth. So please note, this is all for entertainment only. No more plugging. Let's start drilling. Okay, so who are Affirm?
Who is your daddy? And what does he do?
Founded over 9 years ago, Affirm was designed to provide custom fintech solutions for retail consumers. The CEO since 2014 is one of 4 founding fathers, Max Levchin, who requires no major introductions except the fact that he was also a co-founder of none other than PayPal.
Now, we like to remember origin stories, and you and Elon Musk were both at PayPal early on. You're one of the kind of godfathers of fintech because of that.
In October 2017, Affirm launched a consumer app that offered loans for purchases at retailers to ordinary people. This is what Affirm is now synonymous with today.
You knew that, right?
Without question.
In the words of Max Levchin, we're here to improve lives. If that means more work for us or that we make less money, we will always take the more difficult path in favor of treating people better.
Point of sale lending is not a new idea. It's been done by a whole bunch of banks for a long time. And the business model there is let's screw the customer. Let's catch them. Yeah, by charging hidden fees. There's this thing called deferred interest with clawback where you say it's 0%, but not really, because if you're a little late or this or that, it flips back in time and compounds from the time of purchase, sometimes for as long as a decade, so you can really get hurt. A lot of retailers are very familiar with these point of sale issued credit cards, which are generally the business model is to screw the customer and hope they don't notice. A lesser evil but similar one, some of the newer companies in the space are also doing the same thing, where you sort of charge 0% interest, but the late fees are fairly egregious. So we took a hard stand against all those things and basically said we're gonna charge no late fees. Under any circumstance, you can be late. We will remind you, but we will not take your money any more than we promised. So what you see is what you get. The promise and a sticker is the exact number of dollars that you could ever possibly owe us.
Since Affirm became a publicly traded company in January this year, we have had 2 earnings releases, which should in theory open up their financials for deep drilling. Before we drill in, we need to know that Affirm's reporting for fiscal years begins on the 1st of July and ends on the 30th of June.
Don't look confused.
Which is why on the 11th of February, they released their fiscal year 2021 second quarter earnings. One thing to note in these second quarter earnings is when they compare these metrics to year over year or previous quarters, that those results are not public information. So we need to kind of take their word for it.
Are you with me?
The key metrics to focus on in these second quarter earnings for me are the total revenues of fiscal 2021 second quarter was $204 million, which represents a 57% increase year over year. Total revenues less transaction costs was at $89.9 million, which is an increase of 141% year over year. That is just ridiculous, right? This means somehow they have managed to trim costs to deliver, which is huge. Operating loss has also reduced by 3% year over year. Now this is big. Imagine your operating loss was $21.9 million the year before, and this year it had reduced by 92% to a loss of $1.8 million. Well, that is what Affirm has gone and done.
Are you serious right now?
You can't be serious right now.
You serious?
You serious?
Hold your horses though, because their net loss has increased by $0.6 million year over year, which is probably part attributed to their acquisition of PayBright Inc., one of Canada's leading buy now pay later providers. In the earnings release, Affirm provided its guidance for fiscal quarter 3, and they are projecting revenues to hit between $185 to $195 million, transaction costs to be between $125 to $130 million, meaning revenue less transaction costs should hit around $60 to $65 million. That is the forward guidance. On the 10th of May, Affirm released its fiscal quarter 3 results. The headline is groundbreaking. As they note, they have exceeded third quarter financial outlook and will also raise their outlook for the entire fiscal year 2021. CEO Levchin's commentary simply states, during the fiscal third quarter, they had more than double the number of merchants on the Affirm platform, accelerated GMV, gross merchandise volume growth to 83%, and check this, increased active consumers by 60% year over year.
That is simply unreal.
They have also, in recent weeks, activated Shop Pay installments powered by Affirm for more than 10,000 Shopify merchants. Levchin notes they are expecting this number to significantly increase as they move towards general availability in June, meaning the next earnings could even smash straight through these numbers. Now, remember in Q2, they were forecasting revenues of $185 to $195 million. In reality, they far outperformed as they recorded revenues of, check this, $230 million, which means they outperformed their own expectations by close to 18%.
Completely crushed.
But that's not even the tip of the iceberg. Total revenues less transaction costs were expected to be between $60 to $65 million, but they reported a ridiculous $133.7 million instead.
Get out of here.
Meaning they outperformed by over 104%. They did report a bigger net loss of $247 million compared to $85 million year over year, but this includes the $131 million stock-based compensation as part of the IPO and a $78.5 million adjustment with regards to their acquisition of PayBright Inc. When you deduct these, we are left with a loss of $38 million, which is actually a reduction of 55% year over year. Things are certainly, in my opinion, looking very good for Affirm moving forwards. On the 3rd of May, Affirm continued its business acquisitions model by acquiring Returnly Technologies Inc., a leader in online return experiences and post-purchase payments that serves more than 1,800 merchants and has been used by over 8 million shoppers. If you can't beat the competition,
if you can't beat them, join them.
In April, Affirm began to scale up its onboarding of merchants related to its exclusive partnership with Shopify Inc. This could be, in my opinion, one of the biggest growth and go-to areas of Affirm's business moving forwards. According to Yahoo Finance, there is a 74% institutional ownership of the stock. That is huge, but let's drill deeper. One of the biggest institutional holders of Affirm, according to filings as noted on FINTECH, is Founders Fund 5 with over 5 million shares. If you didn't know, Founders Fund is headed by multi-billionaire investor Peter Thiel, who along with Affirm CEO Levchin founded PayPal and was part of PayPal Mafia. Peter Thiel has a serious edge for investing into winning companies. He is simply put a winner. Look at his investments into SpaceX, and he also co-founded Palantir. Other institutions have been flooding into the stock. Look at this. So why has the stock sold off from its all-time highs? Doesn't make any sense. I say follow the smart money on this one, and the smart money in my books is absolutely correct. It probably only starts making sense when we look at the short volume as recorded by FINRA, and the metrics here are through the roof. It's absolutely crazy. Look at this, since 21st of July, the short volume ratio has been as low as 26%, which is still extremely high, but it went as high as 58% recorded just on this Monday past, meaning the shorts are in full attack mode on this stock. The insider ownership of the stock is recorded at 3%. Okay, some quick math. So the current shares on float is 96.9 million. Deduct the insider and institutional ownership, we are left with 23%, or 22.2 million shares. Now, the short percentage of float as per Yahoo Finance and recorded on the 14th of July is 6.79%, meaning we have a free float of around 15.7 million shares. That is a tiny amount, which means there is a high probability the stock will pop if there is any significant buying pressure. And what catalyst do we know we have coming up next month?
Maybe, just maybe,
the fiscal fourth quarter earnings call. To summarize, there is so much to drill into with Affirm that it simply makes no sense to fit it all into one video. The leadership of Affirm, together with its thriving business model, makes me very bullish on the stock. They are not sitting back and are continuously developing new products to serve their consumers.
That same idea of let's unpack the business model and bring transparency, and most importantly, keep our promises to the shopping, buying public is sort of what drives the product roadmap. Those concepts can be applied to savings, to credit cards, to all sorts of other things, to loyalty point management, which I think is relevant for this crowd. So I think we plan to apply our take on what's good and what's honest in finance to everything. Savings is just the one that happened to have leaked out.
At the current price of $66, I believe the stock has room to run up, and for me it's an easy 2x opportunity in the short medium term. I will seriously be looking at Affirm as my next stock to buy, and will load up a long position in this stock and add it to my other fintech play, PaySafe. I think in the long term, Affirm and its stock will continue to edge up whilst consuming market share along the way. Thanks for watching, and do note I'm very bullish on Affirm long term, so please take this drill with additional precaution, and always do your own due diligence. If you are interested in other EPG stocks that I have in my Freedom portfolio, please check out my other videos and consider just consider subscribing to my channel so you can get a little pop-up when a new video is uploaded. I am a simple trader. I try to keep this simple, and will simply see you in the next video.